We got real close to our first target there. Didn't quite hit it. I was thinking about 10%ing that trade, but I didn't pull the trigger, Hogue. And now we're
All right.
sliding back pretty swiftly.
We had negative delta at the highs up there.
Mm-hmm.
So indicating, potential buyers, just quiet buyers up there.
Quiet buyers. Still
Quiet
at 1-to-1
buyers.
R in this trade.
I think we'll get there. Just give it some time.
Yep. Not in a rush.
You want to
We're also
sell
going
one
to play
for the
the opening
rally,
range.
JD? Go ahead.
Sell one for the rally?
If you want to. You want to. I mean, that pretty much makes it a free trade at our current risk, right?
It does, yeah.
That way, maybe we won't touch it this time. We'll just leave it.
I'm working an offer.
New candle.
Coming right back to our entry price already.
New candle. New candle on ES.
Nah.
Working an offer at 18.5.
So, yeah, that WASD report at 11 o'clock a.m. Central today. If you are trading grains, you got to be aware of it. That is the World Agricultural Supply and Demand Estimates. That's a biggie for those agricultural traders.
Yeah.
It sure is,
Beans, corn, wheat. We don't trade cotton, but cotton's in there. Soybeans, corn, wheat. Lots of good stuff.
Eddie, any news out this morning?
You know what? Pretty mild for right now. I'm not showing any hot biscuits or Pop-Tarts for anybody. But I'm watching here. I know that we've had some earlier things, but I'll put some news up here in the chat and see what we've got. But right now, it's pretty mild.
Pretty mild. During this morning, Tesla took a pretty big hit yesterday, 15%. Hit a peak on December 17th, peak price. Let me find that again. What was where to top out at? 479.86 on December 17th. Lost more than 50% in valuation since then. $800 billion in market cap Tesla has wiped out since December. Pretty big move. Is this a giant buying opportunity for Tesla? All right, we just covered one.
Good.
Covered one at 1-to-1 R.
Free trade.
We got free trade. We got a realized profit of $155. And basically, if this comes and runs our stop, it's a scratch trade. We're also going to be looking at the crude oil opening range trade in about 27 minutes. We'll keep riding out this runner, see if we can't get a little more out of this trade.
The exit was 1840.
Yes.
That was a good year.
All right.
1850, Hogue. Yeah, 1850.
Right.
That was a terrible year.
Let's forget about it now.
All right, until then. Yeah, set it, forget it. This trade is locked in. We got a free trade in gold. We'll leave it as a runner. If it comes back and hits our stop, no harm, no foul. We'll be looking at that crude oil trade coming up in about 22 minutes. I'm sorry, 27 minutes. Until then, Hogue, what do you say we run through some charts, see what's happening in the rest of the markets? We'll set the fast markets boys up for success. Maybe take a equity trade. We got Mo here. I know he loves looking at that NASDAQ early in the morning. So maybe we'll find some opportunity in other markets also. All right, Hogue's going to run through some charts. Mo, if you see a setup happening in the equities, feel free to jump in, and we will take a look at that also. All right, Hogue, take it away.
Run them charts, and I got some news afterwards.
Weekly. We are entering rollover week, ladies and gentlemen. Rollover week in the equities, when all the volume and open interest rolls from the March contract into the June contract. I don't know about you, but I'm ready for June. So yesterday, this is the weekly chart, of course. The S&Ps walked through weekly kickoff low at 56.30 and walked right to the 10% off the all-time March contract high. 55.61, that level. You can see that on the weekly chart. We've seen some continuation after the breakout below
Should
the
it went
kind
long?
of
I mean,
long time
short.
frame area of balance we've been
It was
in
a no shave
yesterday,
candle.
let's take a look
Well,
at
it
the
became that.
daily. So this is the daily chart. So see, we're seeing continuation off a failure to take out the overnight high, or the all-time high, I should say, back here in February. Seeing pretty much one time framing activity to the downside. Volume has been strong as it usually is on down days, although yesterday was a little bit weaker than usual. However, remembering its rollover, some of that volume has already moved into the June contract as well as some of the open interest. We added 80,000 estimated new contracts yesterday on a down move. That's a lot of shorts coming into this market, and it came in both the March and the June contract. So we've really brought in some naysayers to the some sellers down in this market. My question is, at this level, are they going to start to get a little bit, or are they going to start to feel a little bit too short? Is the question. Now, remember, it's rollover, and rollover has a tendency to create range-bound markets. Range-bound markets. We're not seeing those right now. We're seeing directional markets and directional to the downside. The question always has to be, what direction is the market attempting to go? Obviously lower. How good of a job is it doing getting there? Without considering rollover, where the volume has been good to the downside, and we've been adding open interest at lower pricing. So that is a relatively healthy downside market. But rollover. I always got to put that little caveat down there, but rollover. So what important reference levels are we looking at early in the session today in the S&Ps? We're looking at weekly kickoff low, 5630. That is in play as we speak and might be somewhat pivotal today. Of course, the 10% off the all-time high, which we reached last night. Take a look at the 30-minute chart. All right. So yesterday, a trend day to the downside. A big, turnaround late in the day yesterday as shorts began to cover some of those shorts. Most of the volume yesterday was, of course, to the downside, and indicating that we probably added a whole bunch of new shorts to the market. It wasn't until last night that we tested down to this 10% off the all-time high. Why do I put those on my charts? For that reason. We're not the only ones that are looking at those levels. Longer time frame, bigger hands traders look at those percentages for potential changes in inventory. Overnight inventory in the S&Ps. Where did we open? Where is that? 1700, right about there. We're trading right about here. Not a lot of overnight inventory. Where are we in relation to yesterday's range and yesterday's value? We are we're relatively close to the center of the range and inside value. With no overnight inventory, inside value, it suggests to me to try and stay patient and look for better trade locations as the day goes on. The profile yesterday was a trend day to the downside. It seemed very organized. There were things in the profile that looked like there was a lot of emotion to this downside move. Those levels of emotion really got revisited yesterday, indicating it was a relatively organized downside move, followed by some short time frame short covering at the end of the day. And of course, price settled at 56.2075, just below that 56.30 weekly kickoff high. Not really seeing any afternoon pullbacks to kind of look at, and with the fact that we're opening in range and value does suggest to me try and stay patient. Perhaps the market has found a level where two-sided trade can occur, and coming into rollover, that would make the longer time frame traders that have a lot of contracts to roll from the March contract to the June contract happy. They would rather have it range bound than directional during rollover. It just complicates rollover. They're just trying to get all of those positions moved from the March contract to the June contract in a cheap or profitable way, and directional markets make that much more difficult. Take a look now at the NASDAQ. Again, starting with the weekly chart. The weekly chart. So we broke a couple of weeks ago the area of balance. We've been directional to the downside ever since. We traded basically right to the weekly kickoff low yesterday before buyers came in and decided to cover some of those shorts, the shorter time frame, weaker hands shorts that took this market to the downside yesterday. We did add 29,000 new contracts to the downside in the NASDAQ, which is a pretty big number. But rollover, we always got to put that little caveat during rollover. Rollover blurs volume and it blurs open interest. However, both the March and June contracts had additions to open interest on a down day. Where did it trade down to? Weekly kickoff low 19,270. And last night, trading close to that 15% off the all-time high. We're getting into correction territory in these equities, ladies and gentlemen. Correction territory. Oh, that word just sends chills down my back here. All right, so here's the daily. Again, breaking that balance area a week or so ago. We're seeing continuation to the downside. One time framing. The question has to be, what direction is it going? Obviously lower. How good of a job is it doing getting there? And if you look at volume and you look at open interest, it looks like the market has a pretty healthy downside auction in play. We don't know when that's going to end. We just have to kind of keep that in mind as we're looking for our daytime frame trading opportunities. All right. Weekly kickoff low yesterday. Important inflection level today. Inflection level, reference level, whatever you want to call it. 15% off the all-time high. Also an important level. All right, let's take a look at how we got there. So the market, a trend day to the downside, trading basically right to the weekly kickoff low, 19,270. It hit there right about 2:15 Central Time. When we're going to see an opposite move on a trend day to the downside, it usually happens late in the day, and that is exactly what it did yesterday. We hit that level, and buyers just said, "Okay, I've made enough money. I'm going to cover some of my accumulation or all of my accumulation to the downside yesterday." So overnight, we looked below that level. We tried to reach that 15% off the all-time high. And remember, folks, we are not the only ones looking at this. This is the 15% off the all-time high in the March contract. Overnight inventory. What do we have? Where is that 5 o'clock bar? There it is. And here we are, right here. Not a lot of overnight inventory. So we're not going to be looking for any early inventory adjustments. Where is the market? It's trading close to settlement, inside range, and inside value, suggesting trying to stay patient. Better trade locations are likely to come as the day goes on, as the stomach turns, as the market turns, whatever you want to call it. The profile yesterday, trend day to the downside, nice recovery off the bottom as some of those shorts covered their shorts. Still a lot of shorts came into those equities markets yesterday when we look at open interest. But again, I have to say it, but roll over. All right. Here's crude oil. Obviously, still largely range bound, a shrinking range. We traded to weekly kickoff low yesterday. We traded to weekly kickoff low last night. Market might be getting a little bit cheap. And when the market is range bound, it rotates from low to high, high to low, low to high, high to low, low to high, high to low. We're going to need some sort of breakout. We're going to need some sort of new selling to come in to break this market state. If not, we're likely getting too short in short time frame here. I believe this market is still short time frame controlled. And if we are getting too short in the short time frame, a lot of those shorts are going to decide to cover, and we may start our next rotation back to the upside. Of course, this is all context. There is no prediction in what we're doing here. It's all about context, always risk management, always patient. Always patient. Look at the daily chart. So we've started to create balance. Said this whole area here between weekly kickoff high and weekly kickoff low, in essence, this balance, those extremes, was going to be a sticky area for price to get through and to get away from. We're starting our 5th day of balance inside of that area. We tested to the lower extreme, last week's low, weekly kickoff low below that. We added 9,100 in open interest to the downside yesterday. Maybe we've trapped some of those shorts near these lows. That's what I'm thinking. Take a look at the 30-minute chart. All right. And so we had a week low at the end of the day yesterday. We have a week high at the end of the day on Friday. We did look to continue the move lower after the close and through the overnight session, trading relatively close to last week's low. Well, what do we have as overnight inventory? Overnight inventory. There it is. we have long overnight inventory. Market opened last night here, traded lower, has been pushing higher all morning. So we do have some overnight longs, or are some of those some of the shorts that got too short in the hole here yesterday, back in range, near high of value? Could be an interesting opening range trade for us. Profile yesterday was a normal variation day. More of a trend, however. Closing right at the low. Settlement was 66.03 if you want to put that on your charts. So possibly looking at some overnight longs or some of the trapped shorts from yesterday's push to the downside coming in to buy this thing. And again, we have the week low that came in at the end of the day yesterday. No excess on the low, but we also have a non-excess high from Friday up here around 68.19. Excuse me. Looking at the extremes, currently last week's low and $68. Right up here is one of the upper extremes. We're in the middle of it. Be careful. Better trade locations may come as the day goes on. Gold. I love this market. I absolutely love this market. Okay. Weekly. Range bound. Let's see. The lower extreme here, upper extreme here, inside it for the last 3 weeks. Centrally located. Okay, so we know it's range bound. We know it's in balance. You guys probably get so tired of hearing me say balance. Direction. Balance extreme. Let's just call that down here. Balance extreme. 28.46. Upper extreme. Pretty much the all-time high. Let's just call that 29.74. I think the most important feature that we're going to see on these charts is on the 30-minute chart, because we still have the island bottom that we left here. And you guys probably get tired of hearing about that too, and late spikes and all that stuff. But these are important things, features, and references for price. So here's the island bottom we put in. We gapped down to it. We gapped above it. We have not closed that gap. We've come back to near the high of it, and we've seen buyers coming back in. Okay, what about the 30-minute chart here? So we're looking at an area where we would expect buyers to come in on these lows. Nice downside move yesterday. Okay, what are we looking at as far as overnight inventory is concerned? So here we go. Overnight inventory long. We opened right at the high from yesterday. So if we don't see overnight inventory adjust back towards settlement, back to where we're near where the market opened last night, we're looking at a strong market, folks. We're looking at overnight longs that are holding on to those positions, looking for more buyers to come in throughout the day. So far, they're getting what they're looking for. It can change at any time. We are seeing negative delta after we put in a new high over the overnight high. So we're seeing negative delta against direction. That is a divergence and might be indicating that there are stronger, longer time frame buyers just sneakily putting in bids and scooping up whatever they can. And then once they get the short time frame short up here, they'll move those bids up. Now, this is all hypothesis. If for some reason the buyers just do not come in or maintain buying up here, some of the overnight longs, we still might get that overnight inventory adjustment to the downside. But overall, I think the market is acting relatively strong. We're still holding on to that long. We took out the overnight high. We gave that back, which gives me a little bit of caution to the upside. But the market, the trade that we're in currently is still valid. We're going to stick with it. So that's the 30-minute chart. Yesterday, range bound, a big move to the downside late in the day, creating a late spike to the downside. The late spike lower is 29.0150. That's the base. Where did we open today? Well, we opened above a late spike lower, which would indicate rejection of lower pricing. Another reason that has me believe that the market is strong and may continue to see a push back to the upside. We don't know this. Everything is hypothesis. Let's take a quick look at the Dow, which we've added to these charts. Weekly. Finally, we've broken balance. Dow was the last one to do so. So we've broken this trend line. We were now below weekly kickoff low. How good of a job did it do yesterday? Volume was pretty good. Again, we are coming into rollover, so
5 minutes remaining.
We added 2,900 in open interest. Thanks, Eddie. We get that red book at 755, right? So we added 2,900 in open interest. Market is attempting to go lower. How good of a job is it doing? I'd say it's doing just an okay job. I'd say all these markets are doing just an okay job, really. Take a look at the 30-minute chart. So big move to the downside, trend day to the downside. This was actually a double distribution trend day to the downside, which actually is weaker than a true trend day. A little bit more emotion to this one. Overnight inventory is flat. We're trading right at settlement. We are potential for repair. Look at weekly kickoff low, 42,130. Walked right through it, been resistant all night long. Resistant at that level. What once might be support has now become resistance. Back to settlement, no overnight inventory. If we were to open at that level, I would say we were probably more likely to fall into some sort of repair where price would come to like the high volume node of this lower distribution of time and volume and this upper distribution of time and volume. Looking less like that is a probability. If we were to open where we are now, I would say that would reduce the probability of a repair day, and we'll have to see what happens. Was looking at, when I was sitting down looking at all this, we were trading right at weekly kickoff low, which I believe is going to be somewhat pivotal. This zone between weekly kickoff lows, 42,130, and the last week's low, 42,208, somewhat pivotal in there. And that's where the single TPOs are. So these single TPOs are areas where business may have been left behind. There may be more business to do up there. That kind of creates the repair attitude or the repair idea. Kind of getting low in the range, below value. It's going to be an interesting trading day in the Dow. It's always an interesting trading day. It's great to see everyone. I saw John Jones was top of the list today. We said Mr. Run, Dan Trader, Tom Shubham, Anastasio, it's good to see you. Slippers, Theo, it is good to see you, my friend. Epic Gamer, Kai, Rick Quas, good to see everybody. That's what we've got as far as the charts are concerned. I know we're getting pretty close to the red book number coming out, and then we're going to see if we'll take a look at that opening range trade in crude oil. Blessings. Let's have a good day.
Awesome. Thank you, Hogue. We got as high as 3-to-1 R on that gold trade, and we are backing off from the highs. Pretty deep.
Do you exit?
Nope, we're still carrying a runner.
All right.
We've got one on still. It's a free trade. I got my eye on the red book too. I'll let you know when it comes out. We got 2 minutes left for that.
I'll be right back.
Righty. So it's still a valid trade, JD.
Mm-hmm.
We see negative delta of about 220, and we're above the opening price. So we're still seeing more aggressive sellers unable to move price lower, at least successfully so far. One thing I don't like about that, JD, is the fact that we were unable to hold the overnight high. A rejection above the overnight high can sometimes indicate, this isn't going to go.
Yeah,
okay.
I took actually the gold trade, only one contract, because I'm not used to trade gold at this time. So I just took this for be with you. It was a valid trade. I took my 1-to-1 at the high and I exited the trade.
Beautiful.
Might give another shot here. Again, it's trying. The buyers are having control.
Here.
No range. Yes, it looks like a range up there, but in fact, it is not a range. It's grinding higher very slowly. My concern only that we haven't seen trap for the sellers. I mean, as you can see, smooth, clean, higher highs. I mean,
So did we
even
get
this
everybody?
one, the small one, we don't see any
We
trap.
got
That's what concerns me. Usually, when I don't see
NQ,
traps, that means stops could be
CL.
here and here and here and here. So they will run all of them at once. So that means your
NQ,
stop, I think,
CL.
your CYA at 915
Yes,
is all
what's
what you
going
can get.
on here?
All what you can do. Actually. So
makes a lot of sense. Yeah, you can visually
here?
see it on the chart where you think stops are starting to build up at.
What happened here?
Definitely.
yeah, and the rejection from
Where did I
22
go
is
wrong?
not a surprise.
Where did I
Actually,
go wrong?
you can see these highs from yesterday.
Yes.
It's not a surprise that we are rejected from there. Yes, we are still looking to 26. That will be wild. That will be, very strong indication that we might even go even higher. So we are at resistance area. So any rejection from this area should not surprise us.
Very good. Actually, that red book number doesn't come out for another hour, guys. I'm seeing 8:55 a.m. Central Time right now.
Yeah, daylight saving will confuse everybody,
Yeah. On Financial Juice, it still says 7:55.
Trading View says 8:55.
What's it going to be?
Let's see. What's it going to be?
Actually, I trust Econo Day.
Investing.com says 7:55 Central.
Econo Day is just simple and clear if you can see my chart.
I like Econo Day too. It doesn't show the red book number on Econo Day though.
No, it doesn't.
Yeah.
Maybe it won't come out.
We're getting mixed signals here. All right, we got 3 minutes until the crude oil open. We're just going to let this gold trade ride out.
Maybe because it's not.
Looks like red book's out. 5.7%. Last was 6.6.
6.6 previous. Yeah, I'm still getting a 1 hour countdown on Trading View. I'll have to send them a note about their calendar.
So
next up,
let me talk about NQ today. So
yep,
an opening call. Usually when I start analyzing any chart,
will get easier.
Because I am day trader, so I focus only on today's information. Yes, sometime I get back to yesterday.
Told you what's coming
so, I see what's happening, especially if it is a trending day. So I want, for example, if it is a trending day today, I want to see, is it continuation of yesterday trend or reversal of yesterday trend? So what do we have now? We have a move down, early Asia session, and then the market reversed up. So that could be translated as a reversal up day. So focus on buying only. Unless the market get back below this one, this high, this low. So this low is very critical. Why? Because it is the low that inside of the downtrend. Okay, so those lows are outside of the downtrend. This one is inside. So this is the critical low that the buyers should protect in order to keep this move high. So as long as we are above 9,400, I will look only for a buy today. If we are below the 400, I will start looking for continue selling this bearish. Again, buyers are stronger today. Yes, they show some weakness in here, but this could be just one major move to the downside. So let's measure this together. Usually when you have a strong up move, usually the other side of the market will do a measured move to the opposite side. So where is that? A, B equal CD. So that could take the market, look at this, exactly to 19,400. So I think buying at 19,400, maybe if we see some structure down there and looking to the buy this to continue this move. That will be a short, a cheap long for me.
Now, if it
Hey guys,
doesn't hold there, does that change
we have
your
crude oil.
bias
Crude oil
short
open
side?
for business, guys.
Yeah, if it doesn't hold, that means my exit, my stop is valid. It's correct. So that my stop is actually a reversal to the other side.
All right. 5 tick opening range so far there, GD.
Yep, I'm watching it. Go ahead and continue. I'll let you know if we put a trade on. I'm looking at the 1 minute opening range in crude oil. Crude oil just opened for business. 8 o'clock a.m. Central Time is regular trading hours open for crude.
Crude also in very strong up move. So let's analyze crude today. So what we have today, we have spike at the open. That gives us the option to look what happened after the spike. Usually when you have a spike, either you will have channel, or you will have range, or you will have wedge, or you have a Doritos, whatever. So what is the shape that we are seeing after the spike? Usually this spike is slow and long, and everyone want to buy, but everyone is scared because they are buying the highs. So what usually happen, the market correct looking for a trap, and we just no, not yet. So the trap is below that low.
Oh man, we lost.
I
We
wait
just got
for
long
the
in
market
crude oil.
up.
Oh,
We
Price
just
got
got long
long?
crude oil.
he bit me.
Yes, we're long opening
I
range
like it.
trade
Let's see
6670.
if we
Long
do-
one crude 6670. 15
my
point
God.
or 15 tick
He got
CYA.
right
CYA
over.
at 6655.
I like it. Yeah, nice stop even. Because I like it more if I see a trap below
Right
that.
here.
So I will not be
Long
trapped in
two.
this. So now
73.
it's valid, strong signal to the upside. However, same
Order
thing
filled.
that happened
Order
to the gold.
filled.
I'm worried about a trap and gold. That's what I'm. So if you got stopped out, don't freak out. Just wait. If the market gets back, jump in again.
This is because
Our gold trade is
I
going
was
a little
here-
south right
I was
now.
listening to the voice over here, and he got me there.
We need those buyers in gold now.
Oh,
Negative
that's a good
50.
sign.
Good.
Negative 590 in delta right now in gold.
Negative 590.
Yep.
In crude, actually, the long is valid as long as
This
we are
one up.
above.
Pick this one up. You make my day. Pick this one up.
area
Pick this one up.
Order filled.
Yeah. Good.
56.93 and 66.10.
So we're
Correction
looking
of the
to
Fibonacci
make
level. So because we have a spike and channel,
3 right here.
then the correction area can be up to this area. Then we will have a strong measured move to the upside. If this area holds, that doesn't mean that the market has to go there. Doesn't mean that. We just need a trap
How about if you
below
stick to
those
200?
lows and a strong rejection to the upside to buy it, and you just put your stop below it. So far, yeah, we don't see that trap yet. I would like to see a trap, then a strong green candle.
Order filled.
Go higher.
Oh, that's
And
beautiful.
as long as we are above this correction zone,
One more here.
the buying is
That's
valid.
3.
Well, our CYA in gold did just hit, so our
To the
free
tick.
trade turned into a
I don't know why it's so
Our
low.
free trade turned into a
but
scratch
thank you.
in gold.
There was the trap.
That was the trap.
Oh, I know why.
Just
and gold
a little too close.
It looked wide enough when we put the trade on. But still hanging on to this long in crude oil right now.
See what happens.
Well, while we got a minute, we're going to bring Eddie in and talk about some overnight news. Eddie, what's happening in the world around us?
The world around us, oi. U.S. stock futures are high over fears the potential recession sparked sharp declines in the Wall Street prior session. Earlier, we did see that the S&P contracted about 0.3%, NASDAQ added 0.4%, and the Dow inched up 0.3%. Now, major averages, if you remember yesterday, sank yesterday, pulled down by the fears that President Trump's tariff plans could refuel pressures and weigh in on growth. Over the weekend, Trump declined to predict if the U.S. was heading towards a downturn, saying that in an interview with Fox News that there would be a period of transition. The benchmark slumped 2.7. We saw the NASDAQ drop to its worst day since 2022, and the 30 stock Dow Jones tumbled 2.1. Treasury yields, which move inversely to prices, also fell, with the drop signing to an ongoing nervousness around the state of the economy. A U.S. dollar index tracker of the greenback against a basket of currency peers ticked higher as well. Bitcoin edging down today. We did see that Bitcoin slipped for 3 weeks here, with the token also taking little support from the announcement of a fresh capital raise from Strategy, world's biggest corporate Bitcoin holder, to buy more crypto. The world's biggest currency declined 0.7% to 80,839. That was earlier today by about 4 hours ago. And that's what I've got here. I'm going to pass it back to you, JD, and see what we've got brewing in the markets.
Thank you, Eddie. We got a couple ticks into this opening range crude oil trade. House count currently scratch up a few ticks
nice
on
exit.
this trade.
Nice exit from the gold, by the way. Nice exit. So as we said, that means 915 is a correct stop. Remember when I say whenever you don't see a trap, stops will be all over the place. So that means those sellers will try to get them all. So the point here that your exit at 915 is correct. I think this market has
order
a
filled.
little bit more to go even lower.
Our overnight inventory, our overnight longs got nervous.
Yeah. So let's do the same thing that we did for crude oil, the ABCD, the correction from the high, almost there. So the sellers got what they want from this move. Maybe if we get above 15 again with a strong momentum, strong green candle, maybe we can jump in again in the gold. However, I'm still If we see ourselves at 915 to 915 again with a close strong green candle here, we can jump in again with stop.
JD, why don't you tell everybody again what the opening range trade is? And boy, we had it nailed yesterday in crude oil.
We sure did. So opening range trade, you look at the 1 minute bar of the opening range. So the opening of regular trading hours. So regular trading hours open in gold is 7:28 a.m. Central Time. Regular trading hours open in crude oil is 8 o'clock a.m. Central Time.
Teaching time.
So in gold, we look at that first 1 minute bar, 7:20 to 7:21 a.m. Central Time. Whatever that range is, you put a stop to enter the market 1 tick above the opening range and a stop to enter 1 tick below the opening range. So you're going with the momentum. If we break out to the upside of the opening range, we'll be in a long position. If we go to the short side, we'll be in a short position. When it hits big. As Hogue says quite a bit, it's a low probability trade. But one good opening range trade will cover 10 plus in losses on the bad opening range trades. So yesterday we hit a dinger in crude oil. We could have carried that all day long, but we ended up taking it at what, 6 or 7 to 1 hour. It was a nice trade. We held on to that for quite a few hours. We got another one happening in gold right now. We're just about 1 to 1 hour in gold or crude oil. Our gold trade, the opening range was very tight in gold this morning, so we actually put on a 2-lot. We covered half the position at 1 to 1 hour, so it was a free trade. We left our stop in where it originally was. We got some follow through to the upside. We were on the long side. We got some follow through to the upside, but as we were doing our analysis, it came back and swiped us out. Mo called that trade pretty well too. They're going to come back down and wipe out this liquidity. We did not move our stop though, so no harm, no foul though. Free trade. We let it ride, and did not take a loss, even though it came back to hit our stop. So right now we're going to keep looking at this crude oil trade, maybe adjusting our stop, trading our stop if we continue to get some follow through to the upside. Let me maximize that chart real quick.
There's an argument for selling.
Now he maximizes after the fact.
NQ right now.
After he explains.
As I said, I don't like to sell it above the 400. Maybe
believable.
I have a nice signal.
This is
a nice signal going down. We have a target for the sellers.
I'm gonna let it go
To 19,400.
No.
It's a nice signal.
Order filled.
At the perfect place, but I'm not taking this. It's too early for me to trade NQ.
Wow! Look at that rejection of
like
the,
to trade regular
the
trading
50
hours,
and the 9.
Like, and NQ, especially.
But I don't want to be here no more. We
a lot of false signals.
I'll show you. We got 70. We got 40.
Back to that opening range trade.
We got
the
80.
Point being is a lot of trend days.
We got
begin right
30,
at the
and we
day,
got
leaving
30.
the opening range at one extreme or the
this
other.
This was yesterday
as
on
we
ES.
saw in crude oil yesterday.
Or maybe today.
We kind of
Actually,
touched it again, and
let me add
we did take a nice profit on it, and it covered
columns.
2 losses from gold earlier, gave us a little bit of a profit, which is always welcome, of course. But it was worth more. So when you do get an opening range trade, it's very difficult just to hold on to it. You're always trying to manage the position or follow with a stop, and so you get a true opening range trade on a true trend day. All you have to do is sit and watch. It's very difficult to do.
It does, but
you always want to do something. So I think we all become Lenny of Mice and Men, and we always want to pet the rabbits.
Don't Lenny it. Don't touch it.
No
entry time. Yeah, this one.
We made the mistake of fiddling with these trades a couple times earlier in the year.
So you can see today is
we're kind of
11,
done with
11, 11,
really
11, 11.
Stops unless
Yeah,
it's
so
really heavily
that
in our
ES was
favor.
from yesterday.
We'll just set it and forget it, like we did with gold today.
This.
And remember,
back here.
Equities and currencies are in rollover. That changes things a little bit. Mo, do you notice a difference in the markets when the markets are in rollover? We're probably going to be moving to the June contract next Tuesday.
Okay.
So we've got a whole
100%.
week of movement.
100%. Whenever there's a rollover, especially in crude oil, I noticed that in crude oil.
The date,
it's every month.
The symbol.
Yeah, because volume are split between the two
size
and
X
movement. Somehow you find some gaps between candles.
Ooh, look at this! Now you go over there,
especially in oil. Actually.
So this was the candle that threw me off. I didn't look at the time. That was my bad.
Maybe in the price action itself, not in the in.
And it was a free trade. I should have left it on.
Or stuff. So in crude oil, you can find it in slippage.
It's coming here.
And you can feel it. But in
but it takes long time.
NQ or indices,
maybe
the price action itself is getting wide.
Everybody's coming to oil, which is good. Let's go here like this.
Makes sense. Makes sense.
Breaking out above yesterday's value high in crude oil right now.
Ooh, look at that.
We got yesterday's value high.
Look at that.
66.78.
Wow. Wow.
On the TopStepX.
Wow. Indicators. I'm glad I'm out of there. I got
rock and roll.
Today is the day to do the right.
All right. Let's.
How do we're going to
do 2 minutes left here together.
Let's change this to 15.
You say we switch over to the ES and NQ again.
15 hasn't
already
changed.
Gave us some nice analysis on the NASDAQ. Oh, what are you thinking about the S&P as far as an possible opening range trade. We are sitting right on top of settlement price right now, 56.2075.
He's talking about this.
With just kind of
no
flat
overnight
right now.
Inventory. No overnight inventory, sitting right on settlement. Right, pretty much, I would say, probably at the low of value from yesterday, 619.
Okay, so why did I do this? There's a reason why I do this.
Frozen. 619.
Reason why I did this. So 56.
Got 619 quarter as yesterday's volume point of control in the ES.
Okay.
But it's kind of gone flat, hasn't it?
Yeah, I mean, there's no overnight inventory, so there's no rush to kind of beat the overnight inventory. It's sitting right at settlement. It's inside value. To me, this is the lowest probability of an opening range trade. And whenever I say
let's
that,
do the levels. Top step levels are back.
It's trading, it's trading right near weekly kickoff low here in the S&Ps. It's trading right near above weekly kickoff high in the NASDAQ. NASDAQ traded to me, I mean, we're in range. We're at settlement. There's no overnight inventory. It's a low probability trade, but it doesn't mean that somebody's not going to come in here and start moving this market one way or another. I think there's less of a chance of that because it's rollover. You got your longer time frame adults in the room, the bigger time frame, longer time frame traders. Probably a little bit more interested in making money on this rollover.
I like it short. How long do we have? Oh, this
really
is the new candle. Let's
directional.
do it.
Of course, they will be. They can be pushed into directional activity, but I think that they're going to start looking at opportunities to move all that order fill from the March contract to the June contract, and I think that's where their focus is going to be. They've just got room in the last few days.
We come in here.
And now already filled.
We come in here. Still, we need to adjust. Take
traffic. I would be cautious. I mean, if it's a cheap opening range trade, you never know. It could work. The cheap offering that the opening range trade often provides is reason enough sometimes to take it. So we'll see what kind of ranges we have as far as that opening range is concerned, and see if maybe we take something. We got Mo here. He's going to be good. We got Dakota here. They're
good.
Actually, we got Jerome here and Dakota.
We come in here. This is my target right here.
Appreciate you being here with us, and all
even though it's
wisdom and knowledge is
away,
appreciated by us and everybody on.
It's one standard deviation.
Absolutely, thanks, Mo. Appreciate you joining us.
Standard deviation.
Yeah, I think if we look to the daily, we are sitting on a very strong demand area. Just for a reminder for everybody, this demand area rises between 19,280 and 18,300. So this area is a strong demand area. So a strong close today is not a surprise for me. Yes, we have been a strong down day at this area. I was waiting for this area since, I draw it 2 weeks ago. So now we are at it. I will not be surprised that we see a strong movement up to maybe 20,000 from. It could be today, it could be this week, I don't know, but this is a strong area. So looking for a buy, and the time of the day today support that idea. We have a reversal up day, different than any other day before. Every day, yesterday was reversal down day. The day before, it is trend down day. The day before, today, it is different. Reversal up day.
Let me see something.
Awesome.
Turnaround Tuesday. Turnaround Tuesday used to be a real thing, folks. All right, guys, we're going to take a short break. We're going to get our boys from Fast Markets in here in just a minute. Eddie, actually, what do we have going on for the rest of the day?
You say Turnaround Tuesday. I think it's an all-star Tuesday. Wait till you see the lineup we got today. Next up, Fast Markets, Coach Dakota and Jerome are here for your Tuesday trading day moving. Coach Dakota took a hit in the markets yesterday, but that won't stop the head coach of the Top Step VIP team, the Pop Squad, from jabbing away this morning. Also, Jerome has been trading steady in his live funded account, bringing in about almost 800 yesterday alone. So stick around.
Stay tuned. We'll be right back.
We promise.
So what was? Second, 1 second. Boom. Gotta do that. 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 The stop is right here, which is 21. 21 here will be right here. We're going to risk this 1,000 and change. 1,200. 1,200.
Order filled.
Oh, what the oh, what happened? Oh man, I did something and and it and it well, whatever. Let's fix it here. 125, 250, 1,250. Save. What happened here? Oh my God! Something's here. What's here? What is this? Oh, now I see. Okay. What is this? Oh, my chart is all wackety whack. Oh man, this is terrible. Sí, ¿qué pasó? ¿Y qué quiere? Ok, déjelo en la mesa. Déjelo en la mesa. Deje el dinero en la mesa. Son 6,000 pesos, 6,000, 13, 6,500. 6,500. I don't know what took place here, man.